Folks, it is earnings season. We've already had some of the big banks and some of the Dow components report. We have a lot more S&P reporting this week. We're going to have a conversation with the one and only Taylor from Life Goal Investments. How you doing, buddy?
I'm doing great. Thanks so much for having me. This is a massive, massive, massive. This is the week for earnings season in Q2.
Yeah. So what have you seen so far? Obviously, we've had the big banks. We've had some travel names like United and Delta and American. We've had a couple of regional banks and some others report. What have you seen so far?
So far, things have been relatively sanguine, right? You've seen travel stocks and airlines post banner numbers. The regional banks, I think, have done fair, I'll call it. It hasn't been great, but it hasn't been, the KRE index, the regional bank index has actually rallied modestly
Hmm.
on the news. And I think that was not because the numbers were great. I think that was because the fear
They
of
were
the
horrific.
terrible didn't
Yeah.
come to fruition. Right. So, but last week, the most important earnings that we've seen so far this season, in my opinion, because the Magnificent Seven has been what's throttling the market forward so far this year, was Tesla's earnings. And
Hmm.
so Tesla came out and beat earnings.
Yeah.
But when you look beneath the surface, there were some areas there of concern. Margin pressure was certainly there. But what you didn't have is you didn't have a massive blowout. And I think that with the Magnificent Seven valuations where they are right now, which seem to be stretched, now that's of opinion by all means. And you look at different data, you could argue both sides of this story. But Tesla beat on earnings and was down 10% the next day. And
Hmm.
Netflix isn't a Magnificent Seven, but it certainly fits a lot of the characteristics that the Magnificent Seven have: tech oriented, inflated, this and that. And I think that you had them show the exact same thing: a beat on earnings. Subscription growth was huge due to no more password sharing, etc. But it didn't hold up to the numbers that the market actually expected, even though the expectations were surpassed.
Yeah, so I've been looking at some key earnings every morning, for the last, I don't know, I guess earnings have been coming out the last 10 days or so. And
Yep.
I actually think I think there's something going on that's not yet reported. I think there's been plenty of companies who have missed on revenue, AKA top line, but beat on earnings.
Yeah.
And as an accountant who used to do this for a living, you can goose earnings by making legal assumption tweaks. You can't fake revenue.
Yep.
Right? Top
Yep.
lines, you can't fake it. And yeah, I mean
So
it across the board. I think it's weaker than people are looking at.
on that very note, I was looking at some statistics the other day, and they were talking about price to earnings. And everyone always talks about price to earnings because it's the thing that hits the headlines, et
Yeah.
cetera. And we all know that price to earnings are stretched. But what was interesting to me is that price to cash flow is significantly more stretched than price
Yes.
to earnings valuations are. They're about 1.5 standard deviations
Oh,
off
one and a
of the
half.
historic norm. Yep, 1.5 standard deviations off of the historic norm where price to cash flow prices stocks at the current valuation.
Yeah. And again, one of the reasons that I'm looking at this and going, getting my, my spidey senses tingling is people always talk about PE, right? Price to earnings ratio. So again, if I am of the experience where the E could be managed or tweaked for a quarter or two before you kind of have to give it back, but you're looking at the top line missing, that does not leave me in a feeling good.
Right. Right. Well, and this week we're going to get a ton. Again, a third of the S&P 500 reports 27 trillion
Hmm.
dollars worth of market capitalization reports this week. So you have, of the Magnificent Seven, you have Microsoft, you have Meta, and you have, what's the third? You have three of them coming this week, and then you have Ford, GM, Visa, MasterCard, Procter
MasterCard.
and Gamble,
Yeah.
3M. Procter and Gamble and 3M, they literally make the entire store of Walmart. So you're going to get some good look at the
At
good
the
look at the
consumer.
bottom line of what the economy looks like from that standpoint.
So which of all these earnings are you looking at and maybe you're like keen on or focused on? Is there one that you're looking at? Is there one that you think is most at risk of disappointing or maybe blowing it out?
I'm just looking at the three Magnificent Seven that are coming this week because, again, they have such stretched valuations. And I'm going to confirm one thing real quick because I want to make sure I just didn't misspeak on which of those big three
Yeah, so it's
are
definitely
actually coming.
Microsoft and Meta. I think Microsoft is Tuesday and Meta is
Google.
Wednesday. Google
Yep, you're right.
reports.
Microsoft on Tuesday, Google, Alphabet on Tuesday, and then Meta on Wednesday. And then we
And
also
all
have
three are after hours, right? All after hours.
yes, yep, all three are after hours. You also have McDonald's, Coke, Exxon Mobil. Like you
Chipotle.
have it
Yeah, there's just
across the economic
mm,
spectrum of cyclicals to tech to energy to all of it. So this is going to give us a really good look at the underlying economic backdrop and how companies are navigating it.
yeah, we're gonna see what's going on with the consumer, what's going on with manufacturing. It's an important week, and it kind of feels like the market is set up for good news, right? We just talked about earlier video about the Dow being up 11 days in a row.
There are
And
good vibes in the market right now. There's no other way to look at it. I guess the downside is I think that there still is a ton the bearish mentality. There still is a ton of cash on the sidelines. That's the
right,
one thing you can point to and say like people are really apprehensive of throwing money at the stock market. But part of that also is the fact that you can move into a 6-month T-bill paying you 5% right now.
right.
And I'm not sure how easily that becomes unglued and pulled into the market when people look at this and say there's zero risk and I'm getting 5%.
Yeah.
It'll be some of the industrial numbers are going to be interesting to watch because industrial production just went year over year negative 0.43% on
Mm,
a broad economic landscape standpoint. And I think what you're seeing is a further divergence of kind of the goods economy and the
yes.
service economy.
Services.
The service economy still seems to be humming, obviously, with all the airlines posting blowout numbers, bars and restaurants seem to be packed, etc. How long does that last? I don't know. But you think about this, higher interest rates don't necessarily dictate whether someone goes out to dinner for not
Right.
or not. But it does dictate whether they make some of these, more seismic purchases that are more industrial production oriented. And that's why you see this, kind of dichotomy and wedge being thrown there. And Powell's still going after the service side, although it's a much taller task to get that tamed.
Yeah. It's going to be interesting to watch. Again, earnings are important. The market is, I do think you're right. There's a lot of money on the sidelines. I think I read something over the weekend. It might have been in Barron's talking about how much money came off the sidelines last week and went into the market. We're seeing some pretty
It's
significant
funny.
numbers.
And now this is super anecdotal and everything, but I had 3 friends call me out of the blue last week.
Mm.
They obviously know I'm in the business and I talked to
Yeah.
them, but this was the first time they had reached out to me and said, "Hey man, I got to get some money to work." And I'm
Yeah.
like, "Yikes, that's not necessarily indicative of
Oh,
times when I want to get my money to work." So I said,
the shoe
let's
shine
cross it."
boys, the shoe
Yeah,
shine boys interested.
exactly
Sell
right.
everything, honey. Sell everything.
So that
Oh
was
my goodness.
again anecdotal, but nonetheless, I
Yeah.
think to your point of all the money coming off the sidelines like that, last week was a big week for that, I believe.
Yeah. Very, very cool. Well, I know you put out daily content for folks. Where can they find it?
Yeah, find us at Life Goal Investments on both Instagram and on TikTok. I appreciate you as always, Michael.
You got it.